Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, streaming in YouTube. We're going to jump right into the markets here. We got some really great fast markets here this morning. Gold is up 17, $18, a high of about 18.35, 36. The drive-in force behind this market right now obviously seems to be interest rates. The 10-year note has been anticipating some kind of a slowdown in the economy, and we got the economic numbers come out this morning. Private companies posted 50% less jobs than expected. They posted about 330,000 as opposed to an expected estimate of about 630,000. This has caught the market by surprise. And obviously, the economy is not as great as everybody is indicating, and interest rates are on their way down, basically. Um, so this is basically creating the fuel that we have here for the gold market to be breaking out as we've been expecting, and also for a big move that we have here in now digital currencies. Hood was up to a high of about close to 85, and trading was halted and reopened now. It's only up about 35, 36%, up about 120% in 1 week. It's amazing the amount of volatility that we're getting here. So we want to watch and see the reaction of the market from these levels here as we approach targets here, and we want to see how the market is reacting. So let's just watch the market here. I'm going to be watching, measuring some things here. I'm going to be posting, trading, and it's time to be locking in some profits here if you took this move. So let's just watch the market here, and I'm going to be observing it with you here as well. We almost completed the 1838 target in gold. 2611 was the sell one weekly target. In silver, we got up only to about 2611. The important thing to notice in silver is that we're trading above the buy one weekly level of the 360-day cycle. This was a major level of resistance that we accomplished, and a little bit of profit taken obviously has come in here. So let's continue to see how the market trades through these levels. We have some supply coming into the market here, obviously from this level here. So let's see what kind of demand or buy-in entry shows in here as the market are retracing back a little bit of the profits. The volatility is going to increase. Expect the volatility to increase tremendously. Private payrolls rose by 330,000 jobs last month. The ADP National Employment Report showed on Wednesday data that for June was revised slightly down to show 680,000 jobs added instead of the initially reported 692. Economists posted Reuters had forecast private payrolls would increase by 695,000 jobs. This is part of the problem here that the media just puts out false information, the data changes. So fundamentally, it's very difficult to follow the market. We seem to have lots of profit taking coming in here in gold, silver. Markets are trying to settle. Robinhood has been halted several times for volatility. It's an amazing stock that is trading at unprecedented levels of volatility. And I think this is just the beginning of what we can expect as far as volatility is concerned. GDLC is up 12, 13%. We have a lot of these digital assets that we loaded up on breaking out to the upside. So right now, we're monitoring the portfolio that we have and benefiting simply by watching the equity increase as the market continues to move in the direction expected. So congratulations if you followed the signals here, and if you have, again, substantial position, you can measure some of the profits here. You can, when you get Hood to go up 120% in 1 week, that's an amazing amount of volatility. But I believe this is just the beginning, and that in fact includes for the gold market, for the metals markets. GBTC is finally turned around, up 4%, trading at 33.26, up 139. Bitcoin is up almost 3%. Almost the target of 39.42 is the sell one level, almost reaching that target. The E-mini S&P, the equity markets, they continue to trade into high ground, continue to find buyers, and of course, the environment that we are in with interest rates coming down, especially now potentially that we could see a slowdown unfolding, or this is what the 10-year note has kind of been anticipating. We're probably going to see the stock market continue to rally. Tremendous volatility in Robinhood. So we have kind of a mixed bag this morning here with very strong digital currencies. The gold market is trading at a higher level here, giving back some of the profits made. And let's just continue to see this fast trading find some stability here throughout the day. When you get this kind of volatility, unless you are in a position and you're trading it, you just got to sit and watch. And if you're not in it, you missed it. Tremendous volatility. Lots more selling coming in here in the gold market, silver market. The digital currencies are holding the gains, but the metals are profit taking. 1821 last. That's a pretty big move from the high that we made of about 1835.36. Fast market in the metals here and lots of profit taken here. We've come down to a level of a trend line support. Fast market in the metals here. Fast trading. Huge profit taking came in the metals, obviously. If you are long, net long, I'm going to suggest that you want to buy dust as a hedge, and you can put a one-to-one hedge as well. Buy dust at the market as a hedge. Begin to hedge your position in the metals here and leave your digital positions open in digital assets here. If you didn't take any profits here early this morning, then you want to hedge with dust, at least a one-to-one. A one-to-one hedge means basically if you have a $100,000 portfolio long in the precious metals, that you buy $100,000 worth of dust against that. Which is why I suggest, even on a private basis, again, maintain 50% liquidity at all times in the account in times like this. And you want to use that cash reserve to be able to buy the hedges when you need to. So maybe at this point, you may want to sell some out of the money calls against your position or buy dust as a hedge one-to-one. Hold on open to your digital assets like GDLC, coin, hood, Bitcoin, while we hedge a little bit here in the precious metals. It's really frustrating to see the kind of a move that we saw here in the gold market and metal and the silver not being able to hold on to these gains. And so it appears that obviously those markets are still very thin. When you get this kind of selling pressure or supply comes into the market, they wiped out all of the gains pretty much. more pressure coming into precious metals here, and you want to make sure that you hedged on your metals position and stay long on the digital assets. Wow, negative on the gold now. It's amazing they gave up all that profit here. So we may see some profit taking coming in. A lot of volatility here this morning. Um, let's just continue to be patient here as today I think is one of the biggest days of volatility that we have seen. The volatility in Robinhood is by far just anything I haven't seen in. I'll be around. I've been around here for quite some time, but I have never or have seen a move of this magnitude in the shortest period of time. This is how much money is slushing around this asset here. Um, so as the volatility increases, I think you want to look at the big picture and deal with this volatility as an opportunity, basically, for you to position. If you're a trader, this is incredible, incredible volatility to trade. It's a question of how you manage the risk during this volatility. I think we got much higher prices coming. This is just some short-term profit taking, but I think the markets are beginning to realize that they need to go much higher in terms of these assets here as we actually begin to see more confirmation of the deterioration of monetary inflation that we have with regards to the US dollar. And so that's the biggest problem. And then obviously interest rates coming down is not supported for the US dollar. And so we have basically a lot of, I believe, signals that are contrary to one another. And the market is trying to find itself basically through this pandemic, through this, you might say, integration of the digital markets into a digital economy. We're in the middle of resetting this economy. And once again, I believe that Bitcoin is gaining tremendous amount of popularity, and markets are showing that to potentially even become a competitor to the U.S. petrodollar. Once again, I comment on the fact that if the energy market begins to price crude oil in Bitcoin, or Bitcoin begins to be priced in crude oil, or they begin to use Bitcoin as a form of payment, as some kind of connection into the actual cash market, we're going to see this um, a reality become more pronounced as it begins to take over pretty much as the world's reserve currency, which is would be an amazing thing. And I believe that's pretty much what this is headed for. And so I think the resistance that we're getting is pretty much the same resistance that you see in the metals markets, which is the other side of the US dollar. Anything that goes up against the US dollar is a threat at this point. And you see it in metals. As you can see right now, we've given up all the gains in gold and silver that was made, and it seems to be again overwhelmed by the amount of sellers and supply that comes into the market that is not necessarily justified by the fundamentals. This is what I see here is a tremendous anomaly that goes on in the paper markets here that we're looking at in relation to the real fundamentals. We have a record debt of $30 trillion that we're about to default on. Interest rates cannot go up, which is the reason why interest rates are coming down. And um, the market seems to be trying to figure out what to do, and I think when it does, I'll tell you, in my opinion, I believe that when the market absorbs basically the fact that interest rates cannot go higher, they cannot taper. Just the talk of tapering is going to collapse the markets as it did back in May in the last meeting that we had. So what we will have is rhetoric, as we had from Chairman Powell about tapering and this and tapering in 2-3 years, maybe less, maybe not. And yeah, they're going to talk about tapering because that's what makes the markets nervous, as you can see. Listen, I believe this is an incredible opportunity to buy a long-term position, buy some of these digital assets and put it in your IRA account if you can do that. These assets are tremendously undervalued. I continue to recommend use these corrections to add to your portfolio. Trade prudently short term, but when you get these big moves up, and if you're in the profit, reduce your position. Take some profits off the table. In the meantime, my friends, continue to buy on corrections. Be patient because I think the gold market, the metals markets are about to make the same moves that we're looking at the digital currencies. I hope you have a fantastic day today. Be well. I'll talk to you soon.